Microphone check and screen share check, please. All right, good evening, guys. Counted Tortoise Capital Nightly Strategy Podcast for October 7th, 2022. This is the just a quick look at the lesson we're on right now in Creativity 202, starting the second half, lesson 16 of 30. This one examines the impact of learning to adapt to a dynamic environment to drive your own expansive creativity. That if you try and avoid the complexities of the environment, it's kind of a closed system mindset that keeps you from exploiting opportunities. It uses the historical example of General Giap of North Vietnam, who had studied in America and learned to use the dynamic tension and freedoms of the American system in developing a military strategy that would oppose them, which made clever use of the environment. And the exercises that Professor Fletcher gives us make us systematically go after opportunities to be uncomfortable, to stretch outside of our normal limits, and to use anonymous feedback from others as a way to get fresh insights into how we are perceived in the world. The trader's exercise is an examination of how unconscious rigidity in the hopes of getting efficiency really was a problem at Lotus 123, and that they had implemented rules for hiring that would have screened out the very kinds of folks that made their company innovative in the early years, and which led to their ultimate demise. And then the reflective questions are a way to look at how we seek and then respond to environmental adaptations and opportunities to take fresh perspectives as part of our learning journal. So I'm looking forward to that set of exercises with the gang tomorrow. Let's take a look at at what we got here. Where are we at? All right, let's start with the short look here. So this is our 5 minute, or I'm sorry, our 30-minute look. So here is today's price action in this box, and this is our 5-day look back, and that's our 10-day look back. This would be the 10-day low, the 10-day high. Yesterday closed up around here, had a gap down today, and then a sell-off that closed poorly, and we're very close to that key price level around 360 and 358, the 10-day lows. So a weak performance. We talked yesterday about today being potentially a fireworks day, and that if the low collapsed, that we needed to be ready to really exploit that to the downside. And that's what we had today. So that should have been well prepared for that move. That was the least surprising move. It's brought it right back into this cluster of resistance. So it wouldn't be surprising to see this hold here. But if it does collapse, then coming down to test 358 is sort of the last gasp of support in this whole sequence. So we've had, those were the two best days in a row since 2020. That move right there. And Thursday, not so much, and then Friday, back to normal, back to a reminder that, yeah, we're in a bear market. So that was a very tradable move today. We'll see the things that were exploitable when we get there. Let's look at the daily charts, and we're looking back 30 days now. So this puts today's move in a little wider context. There's our 5-day and our 10-day and our 20-day look back, and then a 30-day look back, this being the 30-day high, 30-day low, 10-day low, 10-day high. So we've got this little dead cat bounce, came up and tested the PSAR, could not make headway, and going into the long weekend, sold off pretty sharply today. Disappointing a lot of hopes and dreams. So what we did yesterday, you may recall, was take a look at yesterday's low. Said if it broke below that, then we needed to be prepared for that with a target down here, and that's just about what we got. So we are in a compound critical state once more near the 10-day, 30-day, 180-day, or 150-day look back low, and making this a Godzilla in the market because the 5-day range is really large. And in terms of trade location, we're at that triple bottom of the 10-day, 30-day, and 150-day. So this is Godzilla all day, every day. And that's going to make Tuesday fireworks because we've got an extra day of news and commentary as people are sweating it, and they've got to be concerned with this. This sell-off here was everybody bailing that had made any kind of money through here and did not want to carry risk over the weekend. So what that says is there will be some meetings in smoke-filled rooms talking about putting more money into this in the plunge protection team, so don't be surprised to see a gap up and an immediate burst. By the same token, if that doesn't materialize, any sell-off that gets below 360 and 358 should be crushed to the downside. And then if we now take the longer-term view and look back 150 days, this is our 150-day look back to here. So that's our 150-day box. Here's our 30-day box. Here's our 10-day box. Here's our 5-day box. And here's the size of that one-day move. Massive downward move. And this is the support level that we're testing, which this move to here has negated all of that happy feelings. As we've had one leg down, two legs down, and now this little bump from earlier in the week just looks to be sort of the normal short-term opportunistic buying pressure that follows a great big sell-off. So if you see 2 and hope for 3, what you wouldn't be surprised then is a move of this magnitude. So call that from 400 to 360, a $40 sell-off, which could take this to 320, would not be abnormal. So think about that. There's people thinking about that this whole weekend. And they may be looking at this and say, I can't take it anymore, I got to get out. So that would justify a big gap down as they clear the order book with the must sell. And so it wouldn't be surprising to see it gap down and sell off to here, followed by a immediate reversal and morning moves on Tuesday morning, which would be ideal for a frog box or a minimum manageable risk box that plays the morning hook or follows it further to the south. It does either way. We are agnostic with respect to the direction we trade. It doesn't even matter. As long as we're in bearish normal, you get paid to look both ways. Take a look at performance of our tactical symbol set here. And it starts with the S&P was off 2.8% today. The Russell was worse at minus 2.9. Tech was the worst of all at minus 3.8. Emerging markets and diamond were much better, only being down 2%. And even treasuries, the risk-free rate of return, off another percent to close at 101. No safe spaces. Let's look at what got murdered today. So compared to our baseline in the S&P, the things that were worse in terms of sectors was marijuana gave back 2.8 after yesterday's 34% gain. We talked yesterday why we didn't want any overnight risk and why we were content taking our 10R gain as a gift with no overnight risk. Bitcoin, consumer discretionary, 3.5. Ethereum and tech, 4%. Biotech, 4.3. The FANGs, 4.6. Clean energy, 5.25. 6.2% in ARC Genomics. Precious metals and ARC Innovation, 6.5%. Here's Coinbase, 9%. Nvidia in that had been the strongest semiconductor up until yesterday. So the semiconductor group was off 8%. Intel was off 5.3. And where's my Texas Instruments at 4.3? So semis were all part of that slaughter in tech. You got Coinbase 9%, Squarespace 7.3, PayPal 4.5, Ethereum 3.9, Robinhood 3.3. So all the financial disruptors got smoked today. Bitcoin, Robinhood, Ethereum, PayPal, Squarespace, Coinbase. No love. Even Rivian, much like Tesla got smashed for 6.3. Rivian 7.6. Even our steels. Let's look at our metals. There's U.S. Steel, 4%. Alcoa, 2.11. We'll see that at least Cliff was a little better. So that's just about as bad as it can be for all of the growth stories and the disruptors and groovy technology. Just taken out and shot. All right, what was better? And how much better was better? Well, there wasn't much good news. Here's the cut line between gains and losses for the day. So baseline S&P at 2.8. So you got lithium, materials, finance, residential real estate, commercial real estate, all between 2.6 and 2.25. The two lumbers off 2% and 1.7. Consumer staples, that's the defensive sector, down 1.5. Uranium, oil exploration, and Brazil, 1.2, so 1.2 to 2.08. Aussie dollar, energy, and Mexico off 0.75. In the plus side, food up 0.15. Blended commodities, 1%. Inflation trade. Oil, 2.9. And then similar to yesterday's warning where VIX was up 2.5, it's up another 4% today as people were paying a premium for volatility insurance. Devon Energy, not a bad day at minus 0.28. Cliff was the best of our metals at only down 1%. Alcoa, 2.11. So not much joy anywhere. People taking shelter on this 3-day weekend and licking their wounds after another failed rebound attempt. If we were to look at this purely from the long-term hydraulics of the regression line fractals, where we kind of suppress the price and then just look at the flow of the moving regression lines, we might start with the blue line representing price as the RL10. We've seen it climb the Trail of Tears and then 1, 2 down. And now, just on a price basis, it has rolled over sharply. This line here is price. So you can see price is leading the RL10 lower. So that's the test of the collapsing dragon right there. So if that breaks below 360, down it goes. And you can see that from here to here on our Four Seasons of MACD, this period is in the winter because it's below the zero line and the slope is down. And then it just started to try to curl up because of that nice 2-day bump. Well, that started to roll over, and one more day of selling, and that becomes winter. And then you have a winter, failed spring and winter, and that is an instant short. Excuse me. So we will be ready for that. When it cannot get up into the summer and fails, like it did here, and goes back into the winter, you get this kind of move where it went from 415 to 360. That move from here to here, when it rolled over from the spring back into the winter, is a $55 move. So the magnitude of that next leg down would really be shocking if you weren't ready for it. The black line is our RL30, and this is we call this the health of the trend. And that's the one that helps us identify the owls. So for the owls to work, you got to see the price has to be moving up. You got to see the dragon roll up, and then the last one is usually the RL30 rolls up. So this is where the owl entry is on the long side. And on the short side, when that all rolls over, this is about where the owl gets you short. And as long as that slope is down, you have a short side bias. So this thing is just plenty happy to keep going, especially now that it's lower than the previous downward support level in the RL30. The fact that we're already past that is gloom and doom. So if the RL10 is price and the 30 is the health of the trend, the 90, which is represented, the moving RL90, which is this green line, is the health of the next higher trend. And this is the longer term belief of conservative money is failing. Now, it hasn't completely capitulated yet, which would happen when that gets below 370, but the optimism was peaked right here when it couldn't hold and keep going, but instead rolled over. That's what caused the 90 to roll over, and gloom and doom. And then finally, the RL270. It says, what's all the wonderment about? This thing is just getting crushed and staying that way. It sees the entire channel as something like that, and it's riding right in the middle and down. So this is just sort of normal behavior inside that channel. This is not even an extreme sell-off according to the 270, right? Because it actually came fairly close, and now it's starting to reject. And it can get this far away from the RL270 once that pain and suffering happens, and that's why I say 340 is not out of the question between now and the election. And that's only 20-some days. You could see it get smoked that much. As we continue to get into the silly season with October surprises, this is not a time to have convictions unless you've got more than a 5-year horizon. All right, let's take a look at a couple snipers. So this is the standard play in Devon Energy today. Let me mask that for you so it's a little easier to isolate. So this was the open today. The thing ran straight up, came down, and made a new low of the day. I got short with the standard risk box. It immediately reversed against me for minus 0.5. I was distracted and missed that move. So I was playing this way, so minus 0.5. It then immediately rolled over. I was disappointed that I hadn't gotten that first move. So, although I saw a re-entry here when it broke below the PSAR, just essentially to get short where I was short before, psychologically I wasn't prepared, and so I missed that move, which would have been 1, 2, almost 3R in hand. So I was not mentally prepared for that one. This would be a 1, 2, 3 entry as the RL10 curls up, and your risk box could have been here. I saw that. I was also not prepared for that because I was still moaning and whining and sniveling about not being ready for this one. I was prepared to take my standard move at the PSAR flip because now energy was starting to assert itself. So I do take that one with the standard risk box here, and now I'm hoping to get long. Check or hold. How much does any of this matter for the way I'm going to manage that trade? None. Doesn't matter. And so I didn't do very well on this one either. I had about an R in hand, and it rolled over, and I was slow and just scratched. So that one makes me angrier than anything because I'm holding more than an R in hand, and I can't even get no lose plus dinner for 2. Push, reset. Reset. Caught a 2 entry, standard risk box. Back on the board with 1. PSAR flip, standard risk. Observing the rebound, capturing 1. So now out of these two, we're at plus 2. This one was minus 0.5. That one was a scratch. So we're at about 1.5 for the day so far. It reverses, caught a 2. About half an hour. And now what I've got is the market is across the board starting to really get smashed. And this was a higher high, lower high. So now that sets up a 1, 2, 3 kata 2 to the downside, or in this case, like a supported fall crossing. Standard risk box, check or hold. Now this is where I should be stalking a second entry short if it breaks here. If it breaks here, then I got to come back to here and say that's my target. Whoops, can't even draw that straight. Sorry about that. So my first target is here. I could consider a second position short there. My next target is here, and I should consider an additional target there. I missed this collapsing dragon for a second position. I missed this collapsing dragon for a second position. Deep in the money on one. Missed this one for a third position. Just could not get my act together today. At least I got the exit when I'm supposed to. So, 1. So that's plus 4. And we're at 1.5 net so far to here. And it's almost 4, so I think that's all we did today. Yeah. So, pretty clumsy. I give myself about a C- on performance. And I promise to use my gains to... well, I'm going to use it what I always do, in standard use. That has nothing to do with that. This is how well I traded. That's just what happened. That's two different things. So probably left 10R on the table today. It could have been worse. Let's take a look at, this is U.S. Steel. These are all 3-minute charts. Here's the OR3. I missed this little spike up, but the market was already selling off and all the steels were bad. And I said, you know, the RL10 barely followed and then started rolling over right away. There's your collapsing dragon. There's your standard risk box. There's about a third of an R of gain. That's 1 unit of risk, so that's about a 0.3. That's a stop and reverse. That's a fraction. That's a no lose plus dinner for 2 win. Check or hold. Just trying to make contact, and if it doesn't follow through, not sticking around. That's a PSAR flip to the short side as the market is getting smashed early. And this would have been, that blue line would have been waiting for, if I get short here, what would that pattern be? Collapsing dragon, correct. So this one is a high, a low, a lower high, and then it crosses the dragon, so that makes this a kata 2. And I'm essentially just front running the CD. If this collapses here, then I take the move should be the size of this move should be the size of the next move. So I would be expecting, if this collapsing dragon works, a move down to here would not be unusual. So there's the standard risk. That's the same as this risk box, the same as that risk box. Normalized risk. Keeping it simple. Basically a scratch. Re-entry on a collapsing dragon. Got paid a 1R on standard exit. Collapsing dragon for a short, about half an R. And it just wasn't much in there today. So we got a couple R out of that one. Let's take a look at the traders. See how they did today. All right, here's Nolan. The Aussie dollar on the threes. Here's his collapsing dragon, standard risk, good coverage. This would have been the Kata 2 or an SSC reversal. This would have been a Kata 2 second position. He does take the Kata 2 here for a scratch. Oh, I'm sorry. He did take the SSC. I see. That was a cover and then a stop and reverse, and then an exit and then a re-entry. So that's pretty good work. And then the collapsing dragon. He crushes that one to death. I like that he takes advantage of the big sell-off opportunity. And then he tries another one. When this reverses, he tries that one, and it hits him here for 1R. He does not take the re-entry, though, which would have covered that loss. But total for the day, 4. And another probably 0.8 that was available that he observed but did not take. So that's starting to improve there on the Qs. He's looking at the low of the day as a collapsing dragon with a standard risk. Gets paid for 1.8. Gets could have had an SSC in here or here, doesn't take it. And is content to lock in 1.8. Feels like you're slowing it down a little bit and getting there. And I like to see you're working on the 3 minutes. I think you should see that that's a little smoother and a little easier than all the 1 minute stuff you were working on. Here's Tim. Typically professional. This is a Z3 pinch inside here. And this is what we would call the fake 1 hold support at the VWAP and go 2. So the fake 1 go 2 is sort of normal. He crushes it with the, when it rejects the collapse of the VWAP, he gets the SSC, scratches it, and really, he had a span of control issue here, so he wasn't ready for the Kata 2 here. He does get it here for a micro win and then a big win for 2 for the day. Nice work. He was much more relaxed today. Yesterday was busy at work, and that has a huge impact on achieving the flow state. I was listening to some guys musicians talking about the flow. Flow is the opposite of thinking. So if you've got this thing rehearsed to a battle drill and you can just pattern recognize and execute smoothly, you're in that flow state, and you've eliminated the cognitive load of executing standard patterns because you've seen it 1,000 times already. This is Tesla. My brother was well prepared for this one. Here's the gap down opening, the OR5. He gets short with the standard risk. Second position on a 2R in hand. Third position 2R in hand. Closing that out for 5 and 3 and 1. So plus 9. AFK. Then he gets a little quick bite on the short, so 9.8 for that sequence. He's using a buck and a half, which is the computed R10 MMRB, which is 1/10 of a range stat, which is the maximum reasonable intraday move. So nice work there, brother. And then he did some work with the S&P. There was his 9 on the S&P. He had some gains on Chevron, some that didn't work in the energy and steels, and total deal of the day 10.4. Kata 2, re-entry Kata 2, re-entry or second position, third position Kata 2, getting out of it for the 2R. And then picking up the collapsing dragon again, 2R battle drill and scratch, because why not? Really nice work across the board, everybody, today. Let's see, we want the reports now. So now we're setting up for the week ahead. These are the reports that Ken H is using for coming up with his swing targets, which we will frame and analyze in detail tomorrow night. So let's see what we have here. Market remains in bearish normal. We've come all the way back down from the joy of overbought to oversold once more, ready for collapse. The volatility is still saying this thing can go hard in either direction. ETF2 says don't know what you're suffering for because we are still at 0% exposed. We've seen the framings. Now we'll go to the blended monthly rebalancing portfolios for insight. Only Latin America is above its 4-month moving average. And then when you add the ETF 22 portfolio, which includes the XL series, it's the ETF 13 plus the 9 sector spiders. You only got energy and Latin America above their 4-month moving average, otherwise cash across the board. And you can see the difference between being in the losers or the winners. Everything getting murdered here. In the ETF 32, we add some more narrowly focused ETFs in some countries. And the oil exploration has had some gains here on the Nord Stream 2 pipeline getting blowed up. Brazil had a pretty good week and month, as did Latin America and blended commodities and silver. U.S. real estate, not so much. Boy, that's hard to believe. Well, they vacuumed up all of the free cash, and there's no more cash flowing into people's hands to just sling after real estate, so housing prices are coming down. The Dow 30, all cash except for the energy company Chevron. Caterpillar had a pretty good week today, up 11%. We're going to jump to our ETF table. And Latin America is in green and white. That's this part here was good, now great. So there's a chance to exploit new strength with new leadership. I prefer the more narrowly focused Brazil, which is a big component of ILF, but the fact that it's a little more focused gives you a little more volatility, which is what, and I actually like that. This was a good recovery week for the blended commodities. And the U.S. index is losing ground. When it's white and green, that means it was great. Now it's just good. You better be preserving profits. In the liquidities, we're looking at the ATR percentage of the top 30 ETFs based on average daily dollar volume, which are the most. So these are all very liquid, and the ones in green are exceptionally volatile compared to this list of 30, right? So the liquid ones are biotech in Brazil, although tech is pretty close. But biotech in Brazil, oil exploration, and gold miners are probably the best targets. Although we have to give some respect to the energy sector and technology sector. Interestingly, XLK is slightly more volatile than the NASDAQ. So the big fat mature companies of the S&P tech sector, just a little more volatile than the NASDAQ. Would you have bet that? Shift into the daily. Let's go to dashboard 1. And we've seen that most of this already with the volatility trap here. This has been such a good warning about the nature of the market. This entire period of time, when it went below the zero line, there has been nothing to the upside. That is such a good indicator. Just saying. This tells you what you need to know. Big breakdowns in the Dow Tactical on all of those things that are making new lows on those time periods. That's the tail of the tape. And a lot of auto framers. In the ETF Tactical, kind of the same boat. Breakdowns. The only thing not breaking down is oil, and it's breaking out to the upside. As the Saudis, remember our allies who are siding with the Russian position on reducing production. That's what's driving up the price of oil and threatening to destroy the European alliance. How do you like be in Germany right now, watching your pipeline for energy blow up just before you go into a cold winter? And then watching Russia and the Saudis restricting production. Standard auto framer in pinches. I want to get to the snipers real quick. Jumping into the plenty of Godzillas to choose from. I especially like the ones that are double green because they're very volatile on the 5-day and the 1-day. And then in the tactical symbol set, real estate and all of the techs, NVIDIA, the Qs, and ARC Innovations, all in the Godzilla position, very, very tradable. Did this backwards. The 1-day movers, I was interested in the ones that had the smallest volatility. In the chat room, I'm going to upload the most volatiles because there's things like CVS Pharmacy that had 6 Sigma moves today. So I'm going to I will upload that one. But I thought it might be worthwhile looking at the compressions today. TC2000 auto framer standard framing info. Then the sniper stats on our tactical symbol set. You can see that we're still deeply in the spring, but it's getting worse, and it looks like we're very soon to a return to the winter. These three right here, that's what you need to know. Marijuana, real estate, and Texas Instruments, enraged for volatility. Those are the prime movers right now for me. So I'll be framing those. The multi-time frame NDX, this is that eye shocker. That bright red is telling you how bad things are, with very few exceptions, and those would be in the energy and Brazil. Stop me if you've heard this before. And then in the Dow, ExxonMobil, Devon Energy, and Chevron. Otherwise, things just getting slaughtered. These are the biggest weaklings out there. So Intel, Tesla, Coke, Pfizer, plenty of short side targets. And you just need to be this guy right here, just picking your shots and taking it, the little omnivore that thrives in these kinds of chaotic moments. What a rejection that is. Ugh. Wait till this thing breaks here, because then that'll be like this, and this, and this. And the slope of the RL30 starting to roll over. All right, that's everything I want to cover for today. We'll get this published and posted, and we'll be ready for True Storytelling Coaching Circle tomorrow morning, usual time. Swing Trade Coaching, 8:30 tomorrow night. Creativity 202 Coaching, Sunday morning. And Q&A sessions for coaching for new students Sunday night. All right, take good care, guys. We shall see you tomorrow.